Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, August 6, 2007, and the market's closed. And we finally had a decent up day, although it's not convincing that we are at a bottom or seeing a turnaround. The SP 500 did recapture its 200-day moving average, so that's one positive. And if we look at the 10-minute time frame, you'll see that it is also above the 5-day moving average. Only problem there is that we've still got a negative slope to that 5-day moving average. So tomorrow we've got the Federal Reserve meeting, and anything can happen there. I think in order for the bulls to really be back in control over the intermediate term trend, you need it above 148. And even, I definitely wouldn't buy it on a break above 148. I still think it's more of a trader's market. I've said that for the last couple weeks, and continue to believe that to be the case until we have some clearer indication across multiple time frames. Now the daily time frame is, once again, we've got the declining 10-day moving average below the declining 20, which is below a declining 50-day moving average. In my mind, that says the sellers are in control of the daily time frame. And now it looks like the intermediate term time frame is starting to turn neutral again. So once again, we've got mixed signals, and there's no reason to be involved and try and get every tick in the market. Sometimes sitting on the sidelines in cash is the best bet. And otherwise, if you're a good day trader, then there's been some fantastic opportunities in there. So it comes down to knowing yourself and what you're good at. You can also see that the strength today also came up to the downtrend line of the last 5 or 6 days or so, and that's where it was halted. It'd be nice to see a pullback that maybe saw the market get down back towards 145, 145 and a half, and then a push higher. I think we're going to have a little bit more confidence in, at least for a few days. Now we've got a very steep declining 10-day moving average, so maybe it can push above that and then get back up towards that 20-day moving average. That would be up towards 150 or so. So there could be still some good volatility in this market that is good for trading. But the reason I haven't been putting any stocks on the blog lately is because I've been just trading the markets themselves and little bit with the stocks. But the analysis there at the end of the day just isn't going to hold for another day. The markets are just too choppy right now for any type of analysis that's going to hold longer term. Semiconductors were up 1.4%. That was a 52-cent gain. They're still stuck below the 50-day moving average. The 10 and 20-day moving averages are declining, so we've pretty much got more of a neutral market here in the daily time frame, although slightly positive that there was still a slight upslope to that to that 50-day moving average. That's the green one there. So that's slightly positive, but when we look at the short-term time frames, we've still got a fairly substantial downtrend here. And I think you need to see 38 still taken out as far as the upside resistance level, where I think we could get more of a bounce over, the next couple days or so. But for now, it's kind of in no man's land. It looks like it's starting to stabilize in here. It kind of looked like that on Thursday and Friday of last week, and then it fell apart. This might have been the shakeout, though. We're still looking for information here before we can get the facts, really. The IWM came right up to last week's lows, so that bounce on the 10-minute time frame wasn't very convincing. We've got just a very deeply sold off chart on the daily time frame. If you look at it, came down to the March lows right in here and tested those, undercut those slightly. We did see nice volume here on a recovery today, so that's good to see. And also on the weekly time frame, I'm not sure if I had pointed this out, but we've got this longer term from the 2005 lows, that is, uptrend, that looks like it's tested and held in here for now at least. I'd still like to see it get back above last week's lows. That again is about 76.50, let's call it, and I want to see that 5-day moving average start to flatten out before we can really trust it. What would be nice to see is for it to push up towards that 78, pull back down towards maybe 77, where that 5-day moving average might be, and then break past, let's call it $78.20, before the buyers can really be considered back in control of the IWM. But things are looking a little bit better, as they are for the Qs. The Nasdaq 100 continues to trade below its trend line, and you can kind of say it's right on it once again. But the 5-day moving average is declining, so it's right at that trend line. This market didn't make a lower low, or if it did, it was only by a couple pennies. Looks like this low was lower here, though, from August 1st. But the Nasdaq is clearly still the strongest market, but it's not a good-looking chart by any means. We've got a rising 50-day moving average. That's one positive thing about the market. Let's take a look at the longer-term trend line here from this move, and you can see that it is right up against that level. So I think for the buyers to be considered back in control, we need to see $48.45 taken out. Ideally, just like kind of I outlined in the IWM, I'd like to see a rally up towards that level, maybe a pullback down towards 48, that we then see a higher low, hold, and then a break past 48.50. At that point, I think we could get a rally, maybe up towards that 20-day moving average, up near $49. Tomorrow's going to be a tricky day, so be careful.